Well, good evening, everyone. Welcome back to the channel. So today's coaching session is going to be brought to you by motivation, the determining factor in anything in life. I don't know how to say something corny. Anyway, so I'm actually going to do something interesting, something rather interesting today. I'm going to show how much YieldMax I have because I realize I've never actually shown this today. There's going to be two parts to this. So I'm going to do some percentage breakout of like my overall allocations, but I'm not going to show you all everything. I did a 401k video where the bulk of stuff is. If you all haven't checked that out, definitely do, because that account kicked butt last year and it's all in index funds. But anyway, let me go ahead and show you all my YieldMax holdings, because I think there was some questions or debate about, whether or not I was actually a serious YieldMax investor. I do hold YieldMax, but it's not like just 20 or 25 shares. So I will show you all, and this takes a little bit of an act of courage, but I found the screen that I don't mind showing here. So I'm going to show you all my dividend portfolio for the year here. So my dividends mostly come from ETFs. I have some shares of Beto. I have some shares of Coney, and this is a mix between the Roth IRA and the brokerage. Some shares of JPY, some shares of Clip, some shares of QQQX, QQQY, QYLD, SQY, some TNA, and the big one, Tesla. Now, you'll notice for these funds, these paid me like $8,000 in dividends last year. And to date, these have already paid me $4,485, with the bulk of it coming from Tesla. Because as you all see, I hold quite a bit of Tesla. Now, this view doesn't show like cost basis or capital gains. I'm still learning Schwab and stuff, so I don't really like their view compared to the Ameritrade one. But anyway, I can tell you all I'm down 33% in Tesla, which is quite a bit. I'm down a little bit in Coney and SQY. Most of the dividend funds I'm down in. So, but as you can see, for my projected income for this year, it's almost $63,000. So why don't I just retire tomorrow, right? Well, part of that line of thinking is, yeah, this will be nice if this works, but we could continue to see NAV erosion in some of these funds, and these dividends might be based on less and less shares, or not shares, but it might be based on, less and less NAV. So while this looks beautiful on paper, and I've built this up, what I would do, and what I would think would be conventional wisdom, park enough in funds like these to where these could pay you a full-time salary if needed, because it's like a backup plan, so to speak. But have the bulk in index funds, real estate, and other stuff like that. Like what I want to emphasize here, this is by no means a majority of the portfolio. This is just the YieldMax / high dividend piece of the portfolio. So, and the thing about these is these dividends are all what they call non-qualified. So they're taxable. So they're taxed at your ordinary income rate. So if you make these on top of your salary, the good news is you're making more money, but it's going to be taxed at your marginal income tax rates. So if anybody has any questions or comments or concerns, feel free to comment away, and we will get to all of the comments at the end of the video. So yeah, so it was about 8,000. And I think this is missing, because it was actually more, because we just rolled over to Schwab in November. So this is missing the stuff from Ameritrade. But what I want to emphasize here, while this is a lot, I certainly don't have the bulk of stuff parked in these. And so the next thing I'm going to show you all is a pie chart, because I know how much we all love charts and stuff. So what I want to show you all is a pie chart to give you an idea of where this bucket falls and different percentages. So let's see. Let me share this one, and we will get to all comments towards the end. But I just wanted to clear up, because I participated in another live stream the other day, or I listened to it, and a lot of folks over there, oops, I shared the same screen. A lot of folks over there thought they got this idea that I just cover YieldMax for the views. So I was like, no, you know what? I want to clear this up and show that I actually cover it because I really am serious about it. I really am invested in it. I mean, anybody that has over 6,000 shares of Tesla is going to be serious about what it does. The good news is, like, if these completely got wiped out, completely crushed, it wouldn't kill me because I don't have the bulk parked into these. Would I want that to happen? Absolutely not. I want these to do well. I want these to do as well as everybody else does. So anyway, the other screen that I'm going to show is a pie chart, like I was saying. So once I get this pulled up here, we will go into that. Hope everybody had a good end to their week. Now, this pie chart that you're going to see here, this is actually something I put together over a year ago, but I would say it still holds true. And this is very valuable for you all to see because as far as my whole portfolio, if you added the whole thing together, I'm actually a majority real estate investor. That's like 40% of my net worth in real estate. The other 30% is in 401ks. I've got to revise this. That's probably actually closer to 40% now because of the growth that's happened. And then you'll notice the different buckets here that we have. I had a company stock plan, which I rolled into my brokerage account when I left. So that percentage is like 7%. And then the brokerage / Roth IRA was 16%. So all in all, this bucket is about 23%. So the YieldMax falls within the 23% bucket. So it's certainly not the vast majority. So I'm majority index investor, growth investor. So I'm protected with the majority of that because that's what the 401k funds allow you to invest in. So it protects me from being super risky with those assets. So I can play around, with the 15% over here. And then the other buckets I have, so company ESP, the smaller ones here, like there's a pension, there's a life insurance cash balance, speculative investments are about 3%. That's where I trade options and hold leap options and things like that. That's no more than 3%. So if that completely got wiped out, wouldn't kill me either. I don't want that to happen, but I would look at that as like, blowing money, losing it, gambling or something. It's like kind of like the same. That would be the vices bucket, so to speak. And then the cash and checking, I keep a very, very small percentage there just to cover bills. So the bulk of it is invested pretty much either in real estate or index funds or ETFs, growth ETFs, and income ETFs too. So as far as like returns on assets, really my 401ks over 5 years have done the best. It's a cumulative return of almost 178%, which I need to revise this for last year and do another follow-up on this, which I'll do. The real estate, the house has gone up like 65%. The employee stock plan is 100% gain. Now the brokerage, the funny thing is, like when I pick these funds, these have actually, I would say, hurt my percent growth because, like I said, I'm down 33% in one fund. But still, overall, over this time period, 37.5% return in brokerage. Roth IRA is negative. That actually got taken under by Tesla. Life insurance is negative because I'll do another video on the way that's evaluated. That probably wouldn't get views, but life insurance is another story. It's like you pay payments on it and then you get a cash balance in the policy that grows. But that one's actually still in the hole when you add everything up. And then the speculative assets have grown 20% in this time. Now, this only really included 1 year because this included the options trades that I did in like 2021 and stuff. As far as funds in my 401k, you'll notice a slight difference here where I have them summed up. Like I always say, I'm in the S&P 500 index fund that the plan offers. I'm in the large cap growth fund, which that has absolutely crushed it. What you see there is a 400% rate of return. And then annualized over that time, you just take that number, divide by 5. That's been by far my best fund. If I could park everything there, I'd be retired by now. Common stock fund, 161%. Large cap and small cap, both up 60 to 65% over this time frame. And I took a real screenshot from these years here. This is obviously outdated, but you see some of the returns here. So all in all, like I say, moral of the story, I have quite a bit in YieldMax. As a percentage, it is in the 15% bucket, and it's not all of that 15%. It's in that account that's considered part of that bucket. So moral of the story, what I would tell anyone, and I would even go onto that other live stream of that other channel and say this, yeah, that's Kumair's channel. I can just say it. I don't know why I'm being, cryptic about it. We're all friends after all. But I would just say, look, I get it that everybody's everybody's goal is to get rich, get wealthy, acquire money. That's our goal. That's our primary goal. But I would hate to see somebody like mortgage their house, take a home equity line of credit, take loans out to buy more of these funds if they decline in value. Not because I'm against these funds. As you all saw, I've got $71,000 cumulatively parked in these funds. So that's not someone who's against these funds. But the point is, I would not bet the farm on them. It's more of what I would call like a speculative asset. It may work out great. And if you park 70 grand or more, it can put you on a path to where if things work out, you can have an annual income based on that. If it works out, like I showed you on paper. So just to show that one again, and then we'll do some comments. But right now, like I said, on paper, this is beautiful. This would work out. Hold on. I will read the comments at the end here. But anyway, let me share this screen again with the Schwab here. So, I mean, estimated income 63,000. That's like a full-time income. If the funds stay, if the principal value, which here's the thing, cost basis wise, I mean, we don't care about principal until we sell it, right? We care about the yield. So if the yield sustains, you're looking at an annual income right there. But it's a big question. It's sort of speculative. Jay's a great fund manager, but these are hard. You can't control what the underlying does. Anyway, so that's what I wanted to show you all. Hopefully you all like that. Now we will read comments. So feel free to ask away, comment away. New investor was on, says, looking forward to this, coach. Well, yeah, I look forward to talking to you all, of course. Cristobal Cardona says, hi, you're doing nicely. Thank you. Jonathan Harris says, about the taxes mostly classified as return on capital. Really? So is return on capital taxed higher or lower? Or is it just like a capital gain? I'll have to look into that more. Gators Rock is on. Tesla is recalling 2.2 million cars. Rest in peace, Tesla. Don't want to hear that. I still have another 77% left. Should I sell then? The recall is an over-the-air update. Warning light issue. Return on capital is 0 tax rate. Well, I have to disagree with you that it's return on capital because I'm pretty sure I'm going to owe a chunk of change in tax on these. Are you saying that YieldMax's dividends are all return on capital? That would only work in theory because the principal is down. If you sold and took a loss is the only way I see that working. Mr. Cardona says, I would not mortgage a house for YieldMax. Wait, you wouldn't? Uh-oh, I gotta kick you out then. You're not a serious YieldMax investor. I'm just kidding. I wouldn't either. But for SPY that accrues on average return of 10% per year, I do it as long as I got 2 houses. Well, yeah, you want one to live in and the other one to either rent out, or if it goes to shit, it goes to shit. But that way you're hedged, right? And not only are you hedged, but you can put hedges around both too. And trim them up every now and then. So yeah, no, I agree on that 100%. We'll have to look more into this return on capital deal. But anyway, as far as that, hope you all found that useful. Like, comment, and subscribe if you haven't already, and join the Discord. And let's see, one more comment here. On YieldMax site, there's a form showing the percent return on capital. Tesla, well, it would have to be because it lost so much in the principal, but I'll have to look further into that. Are you on my Discord? I'd like for you to join and maybe explain into the audience about that. So anyway, I'm about to hop over to the gym here, do some cardio, some running. And other than that, thank you all for tuning in. Like, comment, and subscribe. We will see you all very soon. Take care and have a good one in the meantime.